Today's video, I'm going to be teaching you a profitable strategy that will help you to grow a small $5 account into $1,000 in the very short period of time. So the strategy of today, we are going to be seeing how to use a WTB strategy. The strategy is a WTB. So what is a WTB? A WTB is wait the trend get break. Are you getting the point? So rule number one. The rule number one is to find the direction of the price. You have to find the direction of the price. Whenever you come in the market, you have to understand where the price is heading, where the price is coming from, because when you doesn't know where you are going, you will not understand exactly where is your destination and where you are supposed to be coming from. Are you getting the point? Always you have to be having a plan, where you are going, where you're coming from, and what you are going to do. So that is the rule number one. Rule number two, to find the key level. Number two is going to find the key levels. So what are the key levels? The key levels helping us to understand where to take the trades. Are you getting the point? That is to get the key level where to take the trade. That key level is going to help us that it will be an indication to wait that when the market reach on this key level or break this key level or break this zone is when I'm going to be executing the market, including the confirmations that the things which will help you to validate your entry. To validate what? Your entry. Whenever you execute in the market without validating your entry, you can't understand the purpose of executing that entry. What forced you to execute that entry? You execute the entry because you have seen that the market is making the high highs. You think that the market is going on your side, so that you just you buy around this place. No, that does not work. By which means, before you execute, before you take buy or a sell in the market, you have to know, why am I buying this price? Why am I selling this market? Are you getting? So all of those, you have to be understanding them. So those are what we call validating, to verify your entry that it is mature enough to be taken. You are candlestick patterns, your key levels, they are validating your entry so that it is mature enough to be taken, and then you can make the profits. You can make the profits. Are you getting the point? So those are the things which we are going to be looking. So rule number three, it is time frame. The time frame is mattering. Which is the best time frame to use WTB strategy? The time frame, we are going to be using H1 as our time frame for looking the direction, and we also have what we call an entry time frame. The entry time frame, it is the time frame where we are using to execute the market, and it is the time frame which we are using to validate our entry before we take the buy or a sell. So I have drawn you the picture of what we are going to be covering. So let us start with top-down analysis. Before we start the top-down analysis, what is the top-down analysis? Top-down analysis is the process whereby understand the structure, the history of the market from the high time frame to the low time frame. It is helping you to build the foundation of the price, to understand exactly what is the history behind the 2 to 3 days back, or 1 to 4 hours, what is there. So that is the purpose of the analysis, because anything it needs to understand before you're doing it, you have to understand. Before you're driving a car, you have to understand the rules and the history of the car, and you make your analysis. Then you starting the engine. Are you getting the point? Before you start the engine, you have to make the overall check of the track of the car to understand. That is what we call analysis. Are you getting the point? To check the pressure if it is on the tires, to check oil is good in the engine, or whatever indicators and lights, all of them, they are working properly. So as well, we have to start our analysis in H1. We have to come on H1. When we reach on H1, what we have to find that the market, which direction is heading, because this WTB strategy, it works on all situations, whether the market is on a ranging market, or it is trending up, or it is trending down. It works in all situations. So when we come on H1, what we have to see, what we have to first look on the chart. When we open the chart, we just diving in H1. What we have to look on when we reach, what we have to look when we reach on H1 is that the market is making the high highs and high lows. So how do we identify that this is a trend, downtrend, uptrend, or equal trend, or sideways trend? So we have to see that the market is making the high highs and high lows. What do we have to do to get our trend line tool? We draw a line here connecting two lows, and then we expand, or we extend our line into the right side, and then we duplicate this line to topward. We connect two lines, and then we push it up. That will show us that this is a trend. After identifying the trend, by which means it is a buy trend. When it is a buy trend, we have to be we have to be buying only. We have to be buying only, no selling, as long as we will get the opportunity to sell. But we have to go with with the trend, not to trade against against the trend. Are you getting the point? So when the market is making the high highs and high lows, after identifying our trend, that we look at the trend, what we have to do, we have to dive in 5 minutes. So this is our H1 trend. This is our H1 trend. What we have to do to dive in minute 5, we have also to find a trend in this trend, which means we have to wait that the market present, or the market print the downtrend in uptrend of H1. We have to wait the minute 5 start making the lower lows and lower highs around this place, or maybe around this place here. So when the market is making the lower highs and lower lows, we also draw our trend. After drawing our trend here, we wait to see that the market breaks this trend, come back and make a retest, and then we continue bring the market from this place to to hit that one, to form a new higher high, because this is high low, high high, high low, high high. So when the market is coming to make a high low on H1, it will be making the lower high, lower low, lower high, lower low, lower highs, lower low in minute 5. So we have to identify this trend. We have to identify in a downtrend in minute 5, in uptrend of H1. Are you getting the point? So after identifying that, we have to to get in M5 to find that this is the low, this is the high, this is the high, this is the low. Are you getting the point? In minute 5. So we wait the market to break this trend line, and we execute. Before we execute, remember we have we have a high low here. We have come back to form a new lower low. This is a lower high here, and in M5 we have come to form a new lower low. So when the markets come and form a new lower low, we are waiting what the minute 5 to break this trend line. After breaking that trend line is how we also to add another confirmation to confirm us that the trend it's now moving from the downtrend to uptrend in minute 5, so that we can continue with the overall trend. We have to draw our key level here, our key level to the previous lower high. So we wait the market, it comes and breaks our trend line. That is the confirmation one that the market wants to move up, and then it also break our key level, the last lower high. When the market breaks that, the last lower high, we have to wait the market come back, to test either this last lower high or to come and test the trend line. It can test two of these, and also that. And another thing to keep it in the mind, we have here what we call a resistance. We have here a support, what we can call that a demand and supply zone. Also it can come to mitigate this demand and supply zone, so that the market can come up again. So all of those, they have to be in your mind. You wait everything here in minute 5. So what do you have to do after identifying the lower lows and the lower highs in minute 5? You wait the market to do to break this zone. When the market breaks, first you trend line. Are you getting the point? Don't execute. Wait until this key level got broken, until the last low high got broken. When the last low high gets broken, yes, that is fine. So don't execute. If the market goes, leave it, it goes. Don't care about it, and then it comes back to make a retest, whether it is testing our trend line, or comes to mitigate the demand and supply zone, or to retest the key level, and then it continues. So how to identify that the retest is it's over? We have to do two things here: lower low, lower high, lower low. This is our trend line, and then the market comes to break. Are you getting the point? So this is our key level. The market have come and break like this. So when the minute 5 start printing the ready candle here, we get our Fibonacci tool. Start from down, we bring it to up here. Are you getting the point? We find the 50% and the 61.8. Are you getting here the zone? We make here a zone of the Fibonacci tool. So we wait the market to retracement to key area of between 50 and the 61.8 of the Fibonacci. When the market reaches around this place, we also add another confirmation. Now it's time to execute the market. It's time to execute the market. So it have the Fibonacci, it have confirmed, it have come back to the zone. So it's time to execute. Here how we have to use a candlestick patterns, a candlestick informations. You have to understand what it is the price telling you after reaching to this zone. How do we confirm that the trend, the retracement or the retest is over? Now we execute. Number one, you have to identify, to wait here around this place, the bullish engulfing, which will be engulfing the ready candle here. Are you getting the point? So if it does not happen, we have to wait a hammer, a candle like this. So to be happening on our area of our key level, to take to take the entry. If that not happen, we also going to do this is our minute 5 then the market has break. It have come back. Are you getting? So if we have failed to identify those two things, the bush engulfing or a hammer, those are two candles what you have to identify around when the market is here. If we have not seen any kind of that, you dive into minute one. You also draw here your counter trend like this. You wait the market to break minute one exactly when it closes above this retracement. You know that now it's time to go. Then you execute exactly. But the minute one candlestick should be what? Should be at least 80% of the candle. 80% of the candle should be above your trend line. Should be broken out your trend line. If the candle breaks your trend line or your key level with what? With 30%, 20%, don't execute, don't take the trade, because we're having only $5. We have to make sure all confirmations are fulfilled so that we can take a high quality trade, so that we don't need to be hitting our stop loss. That's why all of those are the confirmations. So let me take you to chart, and we try to identify all each and everything what I have been trying to say with you in this theory. Alright, we are on the chart right now, and we are on H1. We are on H1, and we can see very well that the market, it have been forming the low highs and lower low. Are you getting the point? So this is what we call to identify the direction. That is what we call to identify the direction. You can just see with your eyes what is taking place like this, or as long as you can see that the market push up, push down, push up, breaks this with your eyes, you see that this, it is higher than this, comes back. When the market comes back printing the red candles, and around this place it have not reaching to this one where it was before, and it have started to coming up again. So this can be enough to show you that exactly that this, it is what it is, totally an uptrend. That is how we can identify the trends on easy way. Are you getting the point? It's enough to understand that the market now, it is going high or it is going down. You can see around this place. You just use your eyes to see what is taking place around here. Of course, it's very easy. Even a kid can say that the market is going up. Are you getting the point? If you bring your kid here right now and you ask him or her what is the price doing, he can tell you. You can ask her what or him where if you see with your eyes where the price is heading, she can tell you, or he can tell you that dad, mom, uncle, sis, the price is moving up, or she is going up. With her eyes, she can tell. So if a kid can tell that the price now is going up, how about you? How about you, an old person? How about you, an old person, that you can't identify that this is what it is uptrend? So as well as you can identify this, that now the market is what it is on uptrend or it is on a downtrend. That is period. We draw our trend channel like this. We draw our trend channel like this. Are you getting the point? Like that way. That is how we can draw our trend channel. Are you getting the point? Are you getting the point? So let's do like this way. As well, you can see that this is our trend channel. When the market was still around this side, that is how we can connect, because this was not yet happened. Are you getting the point? That is how we can connect this and that. Are you getting the point? That can tell us that the market is what is going down. And another thing, you can see that the market was in uptrend, now it have break, come back and make retest, now we are going down. Are you getting the point? But we don't care about this now. Are you getting the point? So after drawing our trend channel, we have to do what? We have to dive in to minute 5 and we start finding the high highs. Are you getting? We start finding the high highs in M5. We wait the minute 5 to make the high highs, and then the price start breaking this structure. We continue selling. Are you getting? That is what we sell according to the what? To the H1 trend. We follow the H1 trend until whether the market breaks up, we continue looking for the buys, or breaks down, we shift the trend, and then we continue looking for the sales. So let us go to minute 5. So we are on minute 5. You can see we have a lot of opportunity here to take. We have a lot of opportunity here to take. And never we see that the market has started making the high highs and high lows, which means this was what the lower highs, lower highs. The market breaks this. Are you getting? Starting the making the high highs and high lows. Are you getting the point? That is what we need this only. Are you getting the point? So we have to identify the high highs and high lows. You can see we have a lot of them. This is our trend. Are you getting the point? So if you can see around this place, guys, the market comes forming the high highs and high lows up to this price. After reaching that place, what we have to do to get our trend, to get our trend line, we connect from down to the up like that way. We connect from down to the upward like this, as you can see. So we have connected that. Are you getting the point? We have connected that. After connecting that, where was what? The last lower low. Where was the last lower high? The market did like this. This is the high high, high low, high high, high low, high high, high low. Because this is a high high, it is higher than this, and this is a low, and this is a low high, it is high low than this. So we get our tool, and then like we get our horizontal tool, we do like this. Are you getting the point? We draw around this area like that way. Are you getting? So you can see that the market, it is around this place. If the market, it is here, around this here, we draw our horizontal line here. We wait the market. If the market breaks this horizontal line and breaks the trend line, we come back and make a retest, and we continue to sell. So as well, we can see around this place what is happening. Are you getting the point? You can see what is taking place. Are you getting the point? That the market, it have come making the high high, come back and form a high low, come and forming a high high, comes back and form a high low, comes up and formed a double top, fails to close above this place, comes back. So this was our support, which supported the market to go up, but the market found a certain resistance this place, and then it failed to break, because here it was resisted, that it started to come back down. The market comes back again, and it found a support. That support forced the market to come back up again. Also found it found another resistance, failure. Finally, it breaks it breaks this support. When the market breaks support, that was our first confirmation that the market now it's going to do what? It's going to sell. Remember, we have another support of our trend line. This is also support on sideways. Are you getting? These trend channels, our trend lines, they are also a side there are side supports and resistance. Are you getting the point? So we wait to see what the market will happen to here. You can see very well the market, after breaking our support, it comes back, make what? A retest. And after making a retest, you can see that the market breaks it very well. It breaks our from our support to break the trend line. It breaks it with what? With a tweezer pattern. This red candle, it is equal to what? To blue candle. All of them, they are equal. If you can see them very well, all of them, they are equal, which means whenever you can see a certain pattern like this, for me, I don't take what the wicks, I take the bodies. If you can see this kind of the body, that all bodies are equal. Well, if this it is red and this is blue, which means the market it will go up. If this it is blue and this is the red, on your key level, the market it will showing you that the market is what is going down. So don't care about what the history behind of that. That it shows the power. It shows the power that the market is going to do what? Is going to go on your direction. Exactly after seeing that, you take you a sell entry around this area, and you can see the next minute 5 candle, it was what? Having a high momentum, which presents and which tells you that the market is what? It's continuing to your side. Not only that, we had another here confirmation which showed us that the market, when it was coming from downside. When it reached here, it formed what? One touch, second touch, and this was what? A third touch, which all of this what confirms that we are heading downside. And remember, whenever the market breaks this, because you can see that whenever the market gets what? A resistance, comes back, find a support. When the market comes, break this resistance turns to what? Turns to be a support. Are you getting the point? If, for example, if I kick the ball, comes to your side, you will be a resistance. And when that ball bypasses on you, someone else there in front of you kicks it, you will become what? You become a support to kick that ball to go back to him, because him will be a resistance, for you will be a support to support that ball to continue going forward. Are you getting the point? So make sure to do your back test this the strategy. Test this the strategy millions of time and get an edge of it to feel comfortable within this WTB strategy. Guys, it is a game changing. It will help you so much. So before we close this session, I want to show you where to put your stop loss and where to put you take profit around this area. Are you getting the point? This will be what you target. You have to target this area. Are you getting the point? Where to put your stop loss? You have to put your stop loss above this key level. All of this last high in minute 5. The entry point exactly after the candle breaks this trend line. If this last lower high is around this place and the trend line is this side, which means wait the market to break the trend line, make a retest, wait also your key level to get broken. After the market breaks your last key level, take a trade like here. Because if you can see around this example, you can see that the key level was the one first to break, get retested, and then the second it was to break what? The trend line. Are you getting the point? After the trend line get broken, then we take the entry stop loss above the all of this structure, and then TP at 90% of this trend, 90% of this what? Of the M5 uptrend here, or 100%. but you have to divide UTP into two steps. Are you getting? Step 1, or what we can call TP1, you can find a reversal U-turn. You can see that the market comes here making the high highs and high lows. This was a huge what U-turn, a big U-turn, which leads the market to move up. Are you getting the point? Which means if you have executed around here, when the market reach to this key level, you can see the moment when the market hits this key level, it started what? Rejecting. So when you hit this key level, just move use stop loss to break even, and then you take some at least 30% of your profit. Are you getting the point? 30% of your profit, and leave 70% to run and hit your overall target. If you have used remember, this is a small account of $5. We can't take some partials. The only thing what you have to do here, when the market hit this what we call a TP1, if it hits a TP1, remove your stop loss from above, put it on a break even. When you put it on a break even, and then you leave the market to move up to 100% of all of this trend, and when it hits that, then at least we'll be having like 30% of your account. From this side to here, you might find you have already made more than $3. Are you getting the point? So that after that, you can keep getting more opportunities. You can see whenever the market starting moving up, you draw your line, then you execute. Are you getting the point? You execute, you scalp that. This is scalping strategy. Are you getting the point? You can see that now the market is doing what it is arranging. The market is arranging. Now you don't take. Are you getting the point? You wait the market to do what? To make the high highs and high lows. You execute. Are you getting the point? The market makes the high highs and high lows. You execute like that until you hit your 1,000 goal. This, it will not be on one day. It will not happen on 1 month. It will not happen on 3 months. To turn $5 into 1,000, it is so hard, and it's the most hardest challenge that you will ever make in your life. So here is my advice. What I advise to you, that at least deposit $50 on your wallet, and then transfer $5 to you, and transfer $5 to your trading account, which means you will at least have 10 opportunities to keep trading. Are you getting the point? And make sure you take one trade every single day. You take one trade every single day. Don't take 2 trades in a day. If you take one trade and then that trade again goes against you and hit you stop loss, which means your account will stay what? We stay with $3 or $2. Are you getting the point? When you remain with $2, come afresh tomorrow and then use that $2. If the trade go to your direction, you find that we come back to break even. Wait to another next day. You come slow but sure. Are you getting the point? Slow but sure. When you plant a mango tree, you don't expect that in 3 months or in 1 year you are going to get some mangoes from that tree. Almost you will wait more than 3 years. Are you getting the point? For us here in Africa, we have African mangoes, what we call kaira. Are you getting the point? Those mangoes, to start taking fruits from them, it takes what? It takes almost 5 years. It takes almost 5 years. Our grandparents and dads and grandgrands, we eating on their trees which they plant, and some of them they didn't get a chance to eat on those trees what they plant, like jackfruit and like avocados. You find that there is some avocado tree which have a last more than 30 years. Are you getting the point? But the someone who planted that tree, and then never ate any kind of fruit from his trees. Why? They grow slowly. Are you getting the point? So there is some trees at home which are having almost 50 years, but now my dad is eating on them, and he always tell us a story that he just waited almost like 10 years, some of them like 5 years, even they have not shown him any kind of fruit. Are you getting the point? And also my dad planted eucalyptus trees. They are in the same age with me. They're in the same age with me. But if you can look at the trees, that is like 3 or to 5 years back is when they cutted them, and then they moved some, they got some timbers from them, but which means he have waited almost 36 years before touching on those trees. He waited to get that good yields on them, but which means to grow a $5 account, it's going to take a huge of time and much effort and consistency, so that the more you hit on $100, it will become so much easier to increase your lot size, and then you'll be making huge profit. And when you reach on $500, it will take for you at least 1 month to see that you have hit your goal of $1,000. Are you getting the point? So that is all what I have for you today. If you are in love with scalping strategy and you want the VieW account very fast, make sure to watch that next video. See you to the next episode. Peace.